Okay, welcome to the Sunday webinar. So we'll go through what is on the watch list for this week. There's not a huge change since last week. I think I say that quite often, but I think the most notable thing really was the Fed. So just to quickly recap, you guys, we did discuss it previously, but we did have a 25 basis point cut from Powell. It didn't seem like rate cuts for December were in the works anyway. So basically what we heard was that there was no guarantee, no promise, no certainty of any further rate cuts, specifically regarding December's cut, or decision, I should say. So that did cause the dollar to see an inflow. Oops, hold on. Here we go. So the dollar did surge on the back of that. This was the initial candle here, and we've seen pretty much buyers continue to step in here. So this could be the news we were waiting for the dollar to continue higher and possibly get some dollar longs in. Now, short term, I'm happy to be looking for some long positions on pullback. So if we can just see a pullback into the moving average cluster here around the 50, the 100, and 200, I will be looking to take a long position. As long as this remains a higher low relative to the previous low and it stays within the trend, I'm completely fine with that. We do still have the US government shutdown, which again is a bit of an issue for me, but we can only trade what we've got, and this is what we've got at the moment. Again, inflation did pop up on the previous release as well, so that is a nice little check in the box for dollar bulls and the rate cut getting likely priced out for December, or at least starting to get priced out. So on the back of that, it does make me quite cautious on the stock market, specifically the US indices markets. So we do have the NASDAQ here that keeps, or has still got this market gap open that remains open since last week, or the open last week. So I'm not looking to take any longs just yet. As well as obviously what we've got from the Fed, it's a little bit of a negative for this market. So I would expect this gap to get filled pretty quickly this week. When I say quickly, it could be Monday, it could be as soon as the market opens, or it could take till Wednesday, Thursday. I'm really not sure, to be honest. But either way, I'm not too bothered. I will likely attempt one long position at 25,200 if we can come and retest this level of resistance. And this will be purely an optimistic play, just seeing if we can ride this any higher into the end of the year. And the reason I'm not overly convinced, again, is because we do have that sort of dampened idea on rate cuts. So just quickly for anyone that isn't aware, rate hikes are known typically to be bearish for stocks and indices. Rate cuts are known to be bullish, and this is because it makes borrowing cheaper when rates are lower. It makes borrowing more expensive when rates are higher. So that's sort of the impact between those two things. So if rates have been getting, sorry, excuse me, if rates have been getting cut this period, obviously, that's not time accurate, but we have seen that obviously bolster these markets. And if the idea now of rate cuts in December is coming in, it is likely to at least pause some of the bullish momentum we've had. Might not completely stop, but it might slow it down slightly enough for us to get a pullback and to enter long. Moving on. We've got China50. Oh, sorry, I forgot to pull over this. So again, just to quickly recap, NASDAQ does have a very bullish reading as well, which is another reason I'd be willing to be or at least attempt to be a buyer in that market. China50 is getting a very bullish score of 12, which is quite nice. Now, I don't know that much about China's dynamic right now, and you do need to look into it a little bit more. But this trade is looking primed pretty much where it is. So as I was saying on NASDAQ, waiting for a break, a retest of the previous highs, China50 has already done that. So I'd be looking for a very simple continuation to the upside. This is very straightforward, break and retest pattern, as well as obviously, like I said, the edge finder is giving it a very bullish score. So fundamentally, the economic indicators are signaling more upside is likely, and the technicals look very bread and butter. So there's not really much else to add on this market. Stop loss would be just below this low here, because if we do end up coming down lower, that would have been this low taken out, and it would likely then take out this low, indicating that the trend is at least short-term bearish. So stop loss on this one, again, is very simple. Targets, I'm not 100% sure really on where it would go. I would say roughly between 17,000 and 18,000 is a reasonable target to have, just based on the R&R, but again, I will refine that probably later into the week. So signal may be sent out tomorrow, depending on how the market opens. Probably, or very highly likely, without take profit listed. And it would be more a case of just trailing stops and waiting for a trailing stop to get hit. Silver, Actually, silver and gold, I suppose we could talk about at the same time. So, silver, I'm actually not looking to take any trades. I'm not really very interested in silver right now. I was in a long position all the way back here on this hammer, this bullish hammer candle. Um, However, once we had this drop off and a little bit of a pullback, I closed it for, it was a very minor loss. It might have been like 0.1% loss or something. But either way, I'm looking for slightly lower prices. So we'll move on to gold and I'll explain the thought process there. So what we've had is the 9 weekly candle pattern. I don't have the annotations and drawings here anymore, unfortunately, but hopefully you guys remember. If you don't, go and check the analyst updates channel and you'll see the 9 weekly candle pattern detailed in there. So what we can typically expect after 9 weekly bullish candles on gold, consecutively, by the way, this is nine weekly bullish candles, we can often expect an average of -8 to -13%. We're currently sat at -11.2, give or take. So there is the potential, based on the data, for further downside. Now, what we've also got to account for is, although gold has been very, very bullish, it's been probably the most difficult market to try and be a seller of for years. Now, this is the first time I am seriously considering like a longer term short position into, excuse me, again, let's round it down to 3,400 just for ease. We've got the Fed that has, again, as I said previously, done a hawkish cut. So that's a check in the box for dollar, and it's a check out of the box for gold bulls. So what we've also got in a price action view is obviously a very clear double top here. We've tried twice now to create new all-time highs and failed. That has led to lower highs getting printed, lower lows as well. Again, very typical bread and butter downtrend that we've formed. Now, for the first time in, I would say, 1.5 years, maybe, gold is getting a bearish reading on the edge finder. So with that in mind, as well as what I've just discussed with the Fed and the statistical data behind what we've already had on gold, I do think it's likely that we could come down slightly lower. Now, we might not reach 3,400. We could just come down slightly, sort of to the lower end of the round numbers, 3,800, 3,700, and so on. So we will have to just monitor it. But again, if we do get in a position, it would be more a case of just trailing stops with the market rather than having a predefined take profit level. Now, on the other side, we do have, oh, actually, not on the other side, that's the wrong way of saying that. On the other hand, what we've got, I suppose, is sort of a mean reversion idea that we could look for on gold now. So one of the big things that we've heard with gold is it's overbought, it's too extended. Now, I've completely agreed with that idea for many, many months. But the problem is, gold doesn't move like an FX pair. It's not bound by mean reverting properties or mean reverting behaviors, really. Now, every market does have that at some point, but trying to time it on gold has been extremely difficult. And I'm not saying that gold's now going to come down and mean revert to the 200 moving average at 2,500. But I do think there is a lot of breathing room that needs to be had on gold now. I think we've had a long period of people buying up gold, buying. And this now seems like the point where we're starting to see people taking profits. We're seeing the Fed take a little bit of a step back from its dovish tone. And this is sort of starting to look like the environment where we could get gold to start coming lower. And it might be the first short that we take on gold in probably 1 to 2 years now. Euro dollar, I think, is very, very simple, very straightforward. Same thing with pound dollar as well. So when we have dollar strength, just by the laws of capital flows, if you will, we do have euro weakness on the back of dollar strength. They basically have a completely inverse relationship. And as I've already discussed, it wouldn't surprise me if we do see dollar bullishness continue, at least into maybe the end of November. Don't keep me to that. That's just my rough idea right now. Again, we'll have to revisit that idea when we get the government reopen. But for now, I think with dollar strength, we could see a very simple 50% retracement on euro dollar to possibly come down lower, retest this low here, create a double bottom, and then we'll have to reassess the situation at that point. But on a technical basis, it seems very straightforward. Again, we do have a really, really clean downtrend, very obvious sort of lower highs and lower lows getting formed here. So it's just now a case of waiting for a pullback, getting into a short position, likely on this 50% retracement, and looking to take it into what could be potentially a double bottom around here. Although what I should also mention is Europe is quite stable in terms of their fundamentals. It's nothing overwhelmingly strong, but that is something I need to keep in mind, or we need to keep in mind, is that although the dollar could gain strength, and on the back of that the euro does lose strength, the fundamentals for Europe is still holding ground, let's say. Next up, we have dollar yen. Now, this one is tricky because I've spoken about dollar yen quite a lot over the past 2 weeks because I've been saying that it's fundamentally very bullish. And I do really like the idea, but what's really keeping me out of this market is the looming intervention, let's say. So fundamentally, this market has pretty much nothing stopping it. We've had the new PM in Japan, basically completely ruling out rate cuts, at least until 2026. We've had the Fed that have just, obviously, as I said, multiple times now, taken a bit of a hawkish cut. So this market's primed to continue higher. The yield gap is huge. I think it's about 350 basis points in terms of the gap, or the yield gap, between the Bank of Japan and the Fed. So it just completely reinforces the rate cut narrative that dollar yen's been moving on for many years. During this point here, when it was just basically easy money to buy dollar yen. But again, although it's a very sort of brain dead fundamental trade, what we need to keep in mind is that risk of the intervention. So anywhere between sort of 150 and 160 is very uncomfortable for the Ministry of Finance to deal with, which is Ministry of Finance are basically who does the interventions. Now, we don't get any warning. We get no heads up, historically anyway. It's not like they tweet out like, we're going to intervene tomorrow, or we're going to do this, or in fact, it's rare for them to even come out and say that they intervened. It's normally down to us to try and research and look into it and say, was it an intervention, or did we just miss some breaking news? So with that, we could take longs, but the sort of catch with this is if we did get into a long position, we would have to trail stops very aggressively. So it'd be a case really of maybe taking it on the H4, scaling down to the H1 or even the 30-minute, and just trailing stops underneath micro structure. And now it might not be needed. Obviously, again, there's no way to know when they will, or even if they will. But that's just not a risk I'm willing to play on, because what I don't want to do is end up in a position that's like this, and then it just drops, and then we've just given up all the profit for no reason. So yeah, it's not a great trade to sit through, but I think we could make some money if we manage it properly. Pound dollar is pretty much the same as I've already mentioned with euro, or the euro dollar. The only difference really is the pound is very fundamentally weak. So I would be very happy to basically just short this market on any opportunity. The downside is we are at a very, very nice structurally respected low here. So the pullback here to a 50% retracement does seem very likely, but whether that will hold, or we might might see a bit of a deeper pullback, is still sort of a question I'm trying to figure out. So we'll have to sort of just wait and see what we get. Either way, I think pound dollar could definitely come towards 1.2. What is that? 1.2722. I think is a reasonable target to have, sort of around there. What we've also got is the situation in the UK is not getting any better. If anything, it's getting worse. We have a very, very poor political landscape right now. So although, and it's difficult for me to say this because the way I trade, the way I look at data is very objective, and that's why I love it, because there isn't really any thinking needed. If the Fed does a hawkish cut, they've done a hawkish cut. I don't need to try and dissect it or do maths or add my own discretion in there. It is what it is. Whereas the UK right now, in my opinion, yes, they've got weak fundamental data, but I think it's going to get worse and worse and worse. I don't think that's really in the data. I'm not even sure if it's priced into the market yet. So right now, and for the past sort of year and a half, for any of you guys that have watched my streams and things, you will know that I've been a bit of in fact, quite a big bear on the sterling or the UK pound for a long time. So I'm just really waiting for that to kick in. Anyway, I'm going off on a tangent there. My apologies. So I think 0.5, if we see the data start getting worse, it would be a case of just holding euro dollar shorts. And I really think if we get the timing right, and depending on the speed of the, what's the right word there? Sort of the crumbling of the UK, not to sound too dramatic. As long as we can sort of align those two things, I think this would be a money printing trade. But again, it's just that idea of how long is that going to take, and can we position around it? Anyway, moving on. Pound Australian, could be a decent trade. I'm not overly bothered about it, but I think we could maybe catch something. So the Bank of England, just from an objective point of view, is not really doing much. They're kind of neutral, but I think they will continue cutting rates at least in 2026, if not earlier this year, or sorry, I suppose later into this year. The RBA seems quite hawkish. They seem to basically just standing on their ground where they are. So I'm looking for two potential take profit levels. One down here at around 1900, sorry, not 1900, 1.927, and the next one here, which I guess could be sort of an extended take profit around 1.89. Either one of those I think is reasonable to look for. So I'm going to see, first of all, can we change trends here? So can we get these moving averages to actually change into a bearish trend? Can we get a reasonable pullback into some sort of structure? And then if those things align, we can start looking to get into a position. So it's just a waiting game really on this one. Dollar CAD, I think, could be a pretty strong trade. I don't think there's a huge R&R potential here. We could look for a 1 to 2.5, maybe a 1 to 3 at best. And that's assuming we do get an entry. So what I'm looking for is a pullback into the I think it's 0.82. I don't really use the fib level. I've only added it recently. I think it's 0.32. Anyway, looking for a pullback into this level because it does line up really nicely with previous structure. So it again, as I've already mentioned many times, it's just a break and retest pattern. Fundamentally, again, as we've discussed, the US dollar to me seems quite firm at the moment. I wouldn't want to be shorting it. Oil is capped around $70. The Bank of Canada is dovish, and again, the Fed policy divergence is supporting the US dollar. So I'd be quite happy to get into some long positions if we can see some sorts of setup arrive here. But for now, it's just a case of, can we get this market to run any lower? Hopefully we can sort of through Asia session tonight, and then we could look to enter tomorrow morning. That would be ideal. But that's pretty much it from my point of view. Phantom says he's DCAing silver. Yeah, so another thing on silver I forgot to mention is the industrial slowdown is limiting upside. Tracks weak manufacturing PMIs. So silver, I definitely think we could get towards $100 on silver over the long term. When I say long term, I mean sort of the next 12, 24 months. But right now, I think we might be having a little cool off on metals, which would obviously allow longer term buyers into the market at slightly better prices. Can't see anything positive coming out of the UK. Budget announcement soon. Yes, that's very true. I forgot to mention that as well. God, missing a few things here. Yeah, budget announcement in the UK sometime in November, but I can't remember the exact date. But yeah, that'll be something we do need to pay attention to. But the last budget we had from Liz Truss was an absolute nightmare. And the way Labour's going right now, I can't see it really being a huge benefit for the currency anyway, especially the economy. Anyway, ladies and gentlemen, I'm going to call it a day here. I hope you all have enjoyed your weekends and have a great week. I'll speak to you tomorrow morning. I'll send through some charts and things for you. In the meantime, sleep well, get some good rest because we have a trading week ahead. Guys, have a good one. Speak to you soon.